Please join us in welcoming Robin Raskin to the stage.
Thank you so much. Good morning to all our friends watching on video. Good wherever you are, whatever you're doing. I am so proud of this panel because to me it represents the change I've seen since I started the Fintech sessions here, 10 years ago, just in who we're serving and what they want. We're going to be talking about Fintech and inclusivity. And yes, it is true. Algorithms have their biases. And computers and AI can be pretty cold and distant when it comes to assessing the humans behind the banking equations. But technology has also ushered in a tremendously exciting new broadening of financial capabilities. This panel will be moderated by Combiz Abdolrahimi. Combiz is with Deloitte's Emerging Technology and Innovation practice. Combiz has served as an attorney, a policymaker, an innovation officer, advising U.S. presidents, cabinet secretaries, senators. Luckily, he wasn't on the floor last night while they were choosing our new House of Representatives. But people from all over Washington depend on Combiz's insights into policy, and his passion is to create an innovative, inclusive program that uses emerging technologies. So I'm going to invite Combiz and the whole panel to come up on stage now, and they will each give you an insight into what they're doing to broaden the envelope.
Good morning, everyone. Robin, thank you so much for that incredibly kind introduction. Robin and I have known each other for a while, and actually we met at one of these conferences just like this up in New York, and we've stayed in touch, and really want to again acknowledge and recognize and just thank Robin Raskin and the virtual events group and Gigi Raskin for convening us today on such a very important topic and something that's very close to my heart. So again, please give another round of applause to Robin and the virtual events group. Thank you. So I'm Combiz Abdolrahimi. As Robin said, I serve as Deloitte's Emerging Technology Innovation Leader. One of the most fascinating aspects of my job is getting to meet with entrepreneurs and innovators from all walks of life to explore their solutions and the impacts that they could have on everyday lives. And I'm really thrilled to be facilitating today's conversation on FinTech's push towards inclusivity. So there will, when we talk about financial inclusion, the question is not merely whether a person has a checking account or a credit card, more fundamentally, whether they have fair and equitable access to safe, affordable, convenient credit, insurance, savings, payments, financial products and services. Because I think we all know that not having access to these services and these products can make life very difficult. You might think that this is not an issue for the U.S., but you'd be wrong. If we look at the numbers, there are 30 million households in the U.S. that are considered unbanked or underbanked. You have 57% of U.S. adults who struggle financially. That's more than 91 million people who are considered to be considered to be credit challenged, meaning that they're either thin files or they have credit scores below 600. It's 62% more likely for people of color to be offered costlier financing options than their equally qualified white counterparts. Black family household net worth ranged from $15,000 to $25,000 for the past 30 years, as compared to $115,000 to $200,000 for white family households. financial illiteracy, and Cleve and I, we were talking about this earlier, has cost American families nearly $415 billion in 2020 alone. That's $415 billion. So this is clearly an issue. This is clearly a problem that we need to solve for. And again, a little bit about sort of my background. I know firsthand what it's like to be financially underserved. My parents immigrated to this country over 30 years ago. They didn't have a credit card or a bank account or any account for that matter. I mean, my dad was a teacher. My mom learned English watching The Price is Right. With no credit history, no assets, they decided to start a small business. And, given that, they didn't have, sort of any kind of basic financial products or services, they had to use whatever cash they could, whatever cash that they had, along with loans from friends and family, and they had to turn to private money lenders, hard money lenders. And so they quickly learned that it's expensive to be poor in the U.S. Yet slowly they started this small business, and they were, one of the lucky ones, and they and they did well, and it was all for me and my sister and the sacrifices that they made, and they still have this small business today. But that should be what it's like for all families, but it's not always the case. So today's session, we're going to talk about how we can harness the power of financial technologies to create a more inclusive financial system that works for everyone. At Deloitte, I'm proud to be part of a team that's helping us solve for some of the society's greatest challenges, working to create trust and confidence and to build a more equitable society. We're investing $1.5 billion, and that's billion with a B, over the next 10 years to help increase social and economic mobility, especially for those facing the greatest barriers to equity and prosperity. Our social impact investment will focus on 3 pillars that are vital to helping create equity within society, including education and workforce development, health equity, and financial inclusion. So if you're an organization that's focused on solving for these challenges, please come find me after our session or reach out to me on LinkedIn. Today, I'm joined by some of the country's foremost experts in fintech and financial inclusion: Omar Hawkins, Director of Financial Inclusion at American Express; Craig Lewis, Founder and CEO of GigWage; Cleve Mesidor, Executive Director of the Blockchain Foundation; and Jeanniey Walden, Principal and Show Host of LiftOff Enterprises. I'm going to ask each of them to introduce themselves, take a few minutes, share some of the exciting things that they're working to solve for financial inclusion. And then we'll have, maybe 1 or 2 questions that I would ask them. And then I'd like to open it up to the audience for Q&A as well. There are 2 microphones in the audience, so if you are going to ask a question, I would ask that you just sort of, line up behind the microphone, introduce yourself, and then ask your question, because this is being recorded and it's on live stream as well. So we can just go down the order. Craig?
No, appreciate it. Craig J. Lewis, I'm the founder and CEO of GigWage. In its simplest form, we're a payroll company for the gig economy. So we help companies and platforms pay, manage, and support independent contractors, freelancers, and gig workers. I started my journey at this little small payroll company called ADP, where I sold the first cloud-based product at ADP back in 2009. And it was somewhere around that time that I kind of fell in love with the democratization of getting people paid, what technology and cloud services could do for payroll specifically. And I've, done a little bit of everything in the payroll and ancillary spaces, but got bit by the entrepreneurial bug and started this company. It was really based on a report I had seen from McKinsey, 2015, 2016, about the global independent workforce, AKA the gig economy. And I realized that it was growing faster than traditional work. People could push a button and earn money. People could work from anywhere and earn capital. And I love the idea of that democratization. Did a lot of things, right? It removes biases, et cetera. But I also realized that the payment infrastructure for that stuff wasn't going to be democratized within an Uber or a Lyft or an Airbnb, and that the ADP of that type of work would need to be built. And so we set out to build it. And so we're a venture-backed organization. We've raised about $16 million to date. We service about 400,000 gig workers, and should clip $1 million, $1.5 million this year. And so super excited about the ability to put money in people's hands. Whether they're underbanked, non-banked, using prepaid cards, walking into Family Dollar or Walmart, people should be able to get the money that they work hard for, and we've built technology with the nuance, understanding, and empathy to do that instantly, on demand, in compliance, while teaching people what it means and how to get busy with that money. So happy to be here today. Look forward to the conversation.
Good morning. I'm Cleve Mesidor. I am the Executive Director for the Blockchain Foundation. We are a 501c3 organization, federally recognized 501c3. I've actually been working in crypto for 6 years, although my background is in public policy. I worked in Congress for 2 members. I also served in the Obama administration. I was the executive director for the Economic Development Administration at the Department of Commerce. It's interesting that I now work at the intersection of public policy and crypto. I first learned about Bitcoin during the Obama administration in 2013 when a friend had a Bitcoin project. And as I learned more about Bitcoin, I learned about economic empowerment. And I was able to see how I could apply what I learned during the Obama administration to empowerment for communities that have been locked out of traditional finance. So in 2017, I actually decided that this was going to be my full-time job. The last 4 years, I've been working with the Blockchain Association, which is the largest advocacy group for blockchain and cryptocurrency in Washington, D.C. Last year, we launched the Blockchain Foundation so we can focus on education exclusively. While the industry is focused on adoption, the foundation is focused on accessibility. Like, how can we educate people? How can we foster greater inclusion? Now, I'm sure you've heard tons of horrible things in the press about crypto. This is not about reputation. Right? This is about giving people access and resources. I like to say that the more options individuals have, the more inclusive money becomes. We have been digitizing money for a long time. Today we accept credit cards as normal. But there was a time when the concept of a credit card that is backed by no money, somebody's going to have a card and just make transactions. And then there was a time when somebody did make that first transaction, and they've become normal. I say that because cryptocurrency is part of this trajectory that we've been on to digitize money, and digital assets are just that next phase of that are all anchored in cash, which is the local fiat. Now, the work that I do is focused on public policy and education, because most people do not know Black and Latino communities lead national adoption of crypto. I'll say that again. In the United States, Black and Latino communities lead national adoption of crypto, which means the greatest holders of cryptocurrency, the earliest adopters, are Black and Latino communities. Regardless of what you see on television, the reason for that is because people who have been locked out of traditional finance, their relationship with money is a little different. They have not been able to access money in a certain way. I'll give a quick example because I know I'm going on now. We just elected the first member of Gen Z to Congress, Maxwell Frost. He's a member of Congress, 20-something, recent grad. What has he been struggling with? He has bad credit because he had to drive an Uber to run for Congress. So he can't qualify for an apartment. Barely can get a bank account. What does it say in America where somebody can become a member of Congress but has to couch surf because they can't get a place to live? That means we're not giving people more options. Fintechs came about decades ago because there was a recognition that people were operating outside of traditional finance, forced to because they couldn't access. So that is the lens we need to look at digital assets from. How much options are we giving people? I'm excited about the conversation, and I'm excited to have this conversation at CES, where we need more large platforms to prioritize these conversations.
Good morning. My name is Omar Hawkins. I work for American Express, and I lead the financial inclusion product management team within Global Commercial Services. And what that means in layman's terms is we're primarily focused on providing access to capital to underserved minority small business owners. American Express has long been focused in the small business space, and we're looking to diversify our product suite so that we can provide more entry points into the organization for business owners earlier in their business journey. Many of you are probably familiar with American Express cards. Back in 2020, we acquired a fintech by the name of Cabbage to build out some of the cash flow solutions that complement our card products. Some of those cash flow solutions include business checking accounts, non-card lending in the form of lines of credit, and data visualizations for the business inflows and outflows via our Cabbage Insights product. It's incredibly important to focus on the underserved segments. When you look at the small business population in the United States, it's about 32, 33 million small businesses in the United States today, of which about 17, 18% are underserved minority business owners. And as you heard from Combiz earlier, many of these individuals are underbanked. They might have thin credit files. Some of them might be credit invisible. So we leverage that acquisition of Cabbage. We leverage AI and non-traditional data sources to help us underwrite and provide access to capital to those who have been historically left out of the financial system by traditional banking. So it's incredibly exciting to be part of this panel today. I look forward to participating and look forward to fielding some of your questions.
Hi, I'm Jeanniey Walden, and I have been a global chief marketing officer for the last 10 years, but left my role in marketing to become a TV show host. So I'm starting a TV show called LiftOff with Jeanniey Walden. It will start airing in March, and it will air in Tampa, Dallas, or Atlanta, New Jersey, and on Amazon Prime. Why that's relevant for this conversation is the reason why I left the world of marketing, where I worked with Mercer, part of Marcia McLennan, and also for the last 4 years at the Fintech startup DailyPay. It's because during the last 10 years, I've been involved in some of the most incredible inclusive conversations that there are to be had. At the World Economic Forum, talking about gender equity, the pay gap, looking at small business owners and everything that you said. And Omar, you'll be happy to know I used Cabbage to start my business. So you're welcome. And what I found is there is so much opportunity to treat the minority groups and communities. But unfortunately, like all of us here at CES, so many people don't have access to the information that's being shared and to the innovation that's being created by all of the companies that you're part of and that we hear of today. So I felt it was time to create a TV show on national TV that would take all of these innovations and insights that happen in the business world and bring them to the everyday person so that the minority communities can start to have information fed to them that give them options and education about how they can create a better financially inclusive lifestyle, create more success, not just around financial topics. We're going to talk about other things as well. But the one thing that I've seen over the past 10 years is there's a lack of education for the broad community. There's a lack of education in our schools about financial wellness, financial security. What does it even mean to have a bank account? And if your parents don't have that insight and information, it's hard to pass it along to your kids. So there's a tremendous opportunity for every company here at CES, as Cleve said, to step up to the table, to be as innovative as possible, to take ownership of it, but then to broadly communicate that and share it with every person in the United States so they can use that to their advantage.
So isn't this an amazing panel? I mean, already I'm just learning so much. I'm really looking forward to seeing your show, Jeanniey, on Amazon Prime. That's incredible. Craig, if I can go back to you, we were talking about this earlier. You completed a recent study on the financial needs of the gig economy in conjunction with the nonprofit Commonwealth, with Green Dot, and the Target Foundation. Can you tell us a little bit about this study and some of its findings and how, what you've learned and how it can help solve for financial inclusion?
Yeah, this was a really exciting project where we wanted to see the different impacts of money on low to middle income individuals. And specifically, we target low to middle income individuals in the gig economy, independent contractors, freelancers, contingent workers, et cetera. So in partnership with Commonwealth, with Green Dot, and the Target Foundation, we ran a multi-month project and study where we gave different types of funding to these individuals. So we had $1,000 that we just gave away in loans. And you had an option. Did you want the $1,000? Did you want a grant? Do you want a stipend? And we just gave a bunch of money away, which is really cool for a guy like me to be sitting in a position to do that. And then we wanted to see the response. We wanted to see the reaction. We wanted to see how did they, not just how they spent the money, how did they react to us offering them the money? And we found out some wonderful things. I mean, obviously, they're spending money on bills and, all of that stuff, the percentages of, insurance and auto, and that was all interesting. But what I took away from it that I found extremely fascinating was most of the workers, most of the individuals took the least amount of money, which was the stipend that we gave, and it was a weekly $80 stipend. And when we dug into that a bit more, what we found was they wanted their money right now, and it was the easiest money for them to get. And we found out as we continued to dig in that the loan was cumbersome, it was scary, they didn't understand it. It was $1,000. They didn't want to pay it back, right? There's all these things, and even the grant, it was too much, it was too heavy. So a lot of our big takeaways, and we're going to do some more research around this kind of as we come back around, where you've got to make things very digestible and accessible for people. But one of the things that really stood out to, kind of the work we do within Gig Wage is people need their money now. And we talk a lot about financial literacy and, making the loan documentation easier. The literacy of finances is really important, but I always say that financial comes before literacy. So everyone wants to teach these people all of these things, and let's just give them the money. That's what they need. That's how you learn. As an entrepreneur, one of the things I talked to my early investors was, we had guys that had never invested in venture or whatever it may be. I said, the best way to learn is to write a check. Right? Don't ask me all these questions. Give me your money. Right? And I think it's the same thing with people. And I come from a low to middle income home. Teenage parents. My mom and dad were 17 and 18 when they had me, 18 and 19. My mom, she's like, you take the year younger every time you tell this story. Okay, they were 18 and 19. And I was in the project. So I was born in married home projects, teenage parents. Dad worked 2 jobs, mom worked 2, the whole hustle. You've heard this story before. And the last thing I'll say is I never felt poor, but we were broke. And what that means is money is really important. Like learning about money is cool, but keeping the lights on is the goal here. And so that study was really interesting in that we saw all the bills that people were paying, all the expenses that they had. $80 a week wasn't enough, but they still took it because it was right now. So really good study that we did, really great partners that we had, and hopefully there's a way we can share it with our members.
Absolutely. I mean, we can circulate that to the folks here in the room as well. Jeannie, if I can turn to you next, we all talk about sort of creating inclusivity with these fintech products and solutions that we make, and Cleve had mentioned sort of, was talking about, Cleve mentioned the, digital assets and sort of the new innovations in this space, and we have a Gen Z member of Congress. So how do you given your previous role and now your current role, how do we ensure that these solutions work for everyone, including younger generations as well?
Yeah, that we're at this really interesting intersection of financial technology and literacy. There's anybody who's over the age of probably 35 that understands statement cycles from traditional credit cards like an American Express or even a Discover. And then you've got anybody who's younger, especially Gen Z, who are growing up in an on-demand economy. They need money, they get it. They buy something, they pay for it. I meet you for lunch, I Venmo you. And there's a huge conflict between the two right now because these younger kids and the younger generations are opening up credit cards and attempting to pay their Discover card as soon as they make a purchase and being told they need to wait for a statement cycle. They don't even know what that is. Now you've got that piece of it, and then everything that Cleve said about the younger generations are also early adopters of alternative types of currency that traditional banks aren't even looking at. So you've got a big race for traditional banking institutions and financial institutions to create products by companies that enable them to support a younger and different approach to finances. Yet you've got, as Craig said, people who just need their money as they want their money. They're going to go for the easiest option. And so some of these other elements are working so well. So that means there's a tremendous need for traditional finance companies and financial institutions to come together with innovations and everything that you're doing, Omar, in your role, and look at what are the needs of the communities. In the Latino community, the average person will not use a large bank. They're using their community bank because they trust in their local community. They're turning for information and advice from people that live down the street in their neighborhood because they don't feel like they can trust the big companies. They could never get access to them before. So we have an opportunity to create inclusivity by stepping back, looking at where the gaps are, and filling those in with the solutions that have already been created, that already exist across all of your companies, but they just now need to be put into play the right way. And, Craig, I know you said you need the money first and the education last. I just want to say, you need the education about what even the options are for the younger generation, so when they grow up, they're keeping away from, being in a situation where they just need the money right now, which we all run into at some point in time, but knowing what your options are is great.
Combiz, if you don't mind, I'd love to piggyback on that point, because what we've found, it's very widely documented, these populations are wildly the victims of predatory lenders because of the urgency of the need for the financial resources. And our research really complements some of the same things that Craig was mentioning around how can we deliver products that are going to provide that access to capital much more quickly. And the acquisition of Cabbage enables us to, via our payments product, when small businesses are accepting transactions from their clients, they can have access to those dollars next day. When the applicant applies for a line of credit via Cabbage, you're applying online, you're avoiding the scenarios of unconscious bias that have really proliferated in a traditional banking situation, sitting across the table from a loan officer, and once they complete the application, they'll have a decision in minutes, and they'll have access to those funds immediately.
That is true.
So I just wanted to piggyback on both points. Thank you.
No, of course. And, so what I'm hearing here is that this, the financial education piece, I think, is really critical. And Cleve, if I can I turn to you next? You and I, we are big believers in blockchain and digital assets and crypto because it is a new form of innovation that is, helping to expand accessibility and push and allowing for younger generations, but frankly, all communities, not discriminating against anyone, be able to have access to financial systems. But let's face it, there are many critics out there who, when they hear of blockchain, crypto, Web3, they maybe in light of recent events, which we won't go into because that can be a whole nother session in and of itself. But critics question if blockchain, cryptocurrency, Web3 are potential tools to help foster financial inclusion. You advocate for the opposite, both you and I do. But yeah, can you explain why?
Yeah, so, crypto's new, barely 14 years old, right? So it is a space that is going through a lot of growing pains, right? No question. So I am not here to tell you, crypto's the best thing in the world, you need to buy in. I am here to tell you that the more options individuals have, the more inclusive money becomes. I am here to tell you that the reason most people of color opt to take their cash is because banks are not welcoming to people who have been locked out of traditional finance. The director of, Ryan Coogler, the director of Black Panther, last March went to a Bank of America who withdrew $10,000 and they called the cops on him because he did not look like what the white person should be. So crypto is a new space going through a lot of growing pains, and we have bad actors out there, but so does the stock market. I have to tell you, depending on the vantage point you're from, because right now we have 4 generations that are driving the global innovation economy, right? Gen Z, I'm awed of them. They have no jobs, but they have the greatest disposable income. I'm a Gen Xer. We are still part of this generation. Millennials, the largest since the boomers that have the most money. So we are in a marketplace where we have to meet the needs of all of these generations. And that's the beauty of fintechs and digital assets. So regardless of where you are in the spectrum, depending on your risk appetite, yes, it is Black and Latino communities and working class people and younger people that are gravitating towards non-traditional assets because they're not gonna get the bank account. And quite frankly, they don't trust the banks or want the bank accounts, right? I am the one, even though I have a master's degree, I make good money that they're going to give me a subprime loan to that is costly and horrible, right? So I will say, has digital assets, cryptocurrency, fulfill its promise to, people of color when it comes to financial inclusion? You've heard this. Technology doesn't solve problems, people do. Well, I worked in government, in Congress and in the Obama administration. Government doesn't solve problems either. Right now, what we need to do is give people innovation and policies that will allow them to solve their problems. And what we do know is that financial exclusion, inequities play out differently depending on your community. I am a Black woman. In the Black community, inequities play out very differently than the Latino community, then Indigenous and Native communities, right? Then even different among women, right? So people want to question whether or not, crypto is a pathway for financial inclusion. I would say options are, and crypto is just a tool. Why is it a tool? Because traditional finance has failed people, because banks have failed people. The stock market and bonds, I'm in my 40s, I don't even go that route. Young people now, even the ones who are making millions, are not looking for an asset manager. But again, we have 4 generations, so this is not about, do we get rid of cash, do we get rid of this? This is about options. Now, in terms of what we're seeing about crypto, there is a problem. I work at the intersection of public and policy. I advocate for inclusion. I spend my time trying to get members of Congress to focus on policy around crypto that provides access to capital for entrepreneurs, that actually focuses on education and training, But where do they spend their time? They spend their time focused on, is it a commodity or is it a security where the CFTC and the SEC fight over each other, and whether we need a spot ETF now that we have a Bitcoin ETF. So even within Congress, focus is not on what are the policies and tools that can help the innovators, the entrepreneurs, the working class people who are really fueling this space. They still focus on the issues of the wealthy and where did it get us, right? Just so you know, we've had these debacles recently, right? Tornado Cash, you've heard of them, Terra Luna, Celsius, even FTX. People do not understand the space is very dynamic. For Black and Latino people, for women, for people who have been locked out, that is not where we had the most exposure, right? So this whole concept of, oh my God, these people are losing everything. The most exposure to Celsius, Terra Luna were established investors, retail investors with money. But we don't spend time thinking about, oh my God, they're being dumb. Our exposure to crypto is where there's actually the greatest security within Bitcoin, within the Ethereum ecosystem, within the spaces that are creating products and services for consumers, but also within the spaces that are empowering people where you actually can have access and you can build. So we need to give crypto time to grow, but we need Washington and the industry to start shifting focus to the real dare in the industry. And the dare in the industry is entrepreneurs. When you look at anything big that's happening in crypto, it's fueled by entrepreneurs and everyday people. So I'm gonna stop my rant now and get off my soapbox.
I mean, so what I'm hearing is that there you go, excellent, wonderful. So what I'm hearing is that these technologies are helping democratize access to finance. Omar, we talked about this before coming on stage, but, American Express, supporting small businesses. Small businesses are the main drivers for innovation and entrepreneurship in this country. My parents, again, I share the story. Without, companies like yours, like American Express, they would not have been able to, have, access to capital that they needed. So, if you can maybe give us a little bit of insight into how American Express approaches underwriting for small businesses and sort of enabling empowerment and providing, the options and the tools.
Absolutely. So, as I mentioned before, we want to democratize underwriting. We want to move as far away as possible from these formerly bias-laden scenarios of applicants sitting across the table from a loan officer. And for that purpose, we've built a number of online interfaces for our applicants to submit their applications. From an underwriting perspective, we still use some of the traditional means, i.e. FICO, but we're also moving into the space of AI and bank-based underwriting, because that gives the most real-time look and visibility into the inflows and outflows of that small business. And with that recency of data, we can make more confident decisions of providing yes or no decisions and the line size amount that would be appropriate. And as I mentioned, as we continue to diversify our own product range, including Amex Business Checking, persistent visibility gives us the ability to extend higher line sizes as needed. There's one more partnership that I want to reference. In addition to what we're doing through our proprietary product offerings, we work with a nonprofit by the name of Acción Opportunity Fund. This is a community development financial institution that makes installment loans to underserved minority small business owners. American Express committed $40 million to this organization for that express purpose. And over the last year, full year 2022, we've grown our originations through that partnership over 1,100%. And we're very excited about the trajectory that we're on, because we've forecasted that we should exhaust that $40 million investment by as early as end of this year or Q1 of 2024. So this gives us another means, in addition to our proprietary products, to get access to capital in the hands of the underserved.
That's awesome. That's wonderful. So it looks like, I mean, again, we can have this conversation. There's lots of questions, I'm sure, but I think we have time for maybe one question from the audience. We are actually at time, but if somebody had a burning question in a few seconds, yes, sir. If you don't mind using microphone, or actually, you know what? I can repeat your question just so that the live stream can pick it up. And yeah. You can ask here, or you can go to the microphone. Just, yeah. And we're going to stick around after, so please feel free to come up and talk to us as well.
First of all, I appreciate everyone being here and sharing what you all had to share with us. Financial inclusion has been a topic for the last 4 years. And I've been going to many events, Money 2020, CES, and others that are local in Irvine, California. And it's been people as yourself that have motivated us, entrepreneurs, to go out and reach our community and make impactful technologies, tools to go ahead and offer them everything that you just spoke, right? In my experience, as well as other entrepreneurs that want to make a change and include minorities, the unbanked or underbanked, have succeeded in, for the most part, taking the idea into fruition. In my experience, I've been creating a digital mobile wallet for everyone, but it's specifically helping the Latino community, the unbanked and underbanked. It's called Dinero. But where my question lies to all of you is, technology is there, tools are there, and I've been lucky to have found even investors and great people to back the project. But it seems in the end that the banks still control that power because it makes it really expensive and almost impossible. For us, it's been 2 years in the making. So my question to all of you is there some sort of consensus or a meeting of the minds to say either us big financial institutions that are already in that power, like Deloitte, American Express, right, for example, to say, you know, we're a financial institution, let us go out and help the entrepreneurs that are driving this force and this momentum, because yes, we talk about it a lot, but what are we doing? Because the banks make it impossible, right? Just in fees alone, to be sponsor or partner bank or licensed from a bank, because you still need cash to operate with Bitcoin for trading or for buying. It's about $500,000 a year just in licensing, not to mention every transaction for loading funds, transferring funds out from your wallet to your local bank or bank. So that's my question. It's what's happening? Are you understanding that, or are you aware of that to provide those tools, those licensing and partnerships with those young entrepreneurs that are trying to do exactly what you are commending us entrepreneurs to go out and do?
I feel you, because that's why I'm in crypto, right? Because traditional banking has not worked for us. But you're right, big banks still control our economy, right? And so in crypto, we're reimagining a new economy that is more grassroots driven. I will say, you know, yes, will they ungrip those reins? Let's be honest, a lot of fintechs are funded by big banks or subsidiaries of big banks. But for me, one of the things I've been advocating for, because where we see the greatest adoption of fintechs is among new investors, groups that have been locked out, and they're creating new metrics for wellness. We need to strengthen minority banks, CDFIs, and credit unions. We need to make sure those financial institutions that are on the front lines, that the people you're talking to will go to,
Who are
we
in
need to
those
make-
communities.
We
Yeah,
need to
who are
make
in
sure
those
we're empowering
I
them.
think it is a partnership. You know, it's not, no one can go at it alone. It requires that partnership and collaboration. We are at time, we are over time. Want to thank everybody. Want to thank our amazing panelists. Please join me in giving a round of applause to the folks here and to everybody in the room and to CES. Thanks, everyone.